So we're back with part 3 of the trend reversal series. So in this video, part 3, we're going to take a look at when we want to buy and sell on the lower time frames, either the 4-hour or the 1-hour time frame, or basically any lower time frame that you trade on, because we trade differently as traders, right? So some of us may trade on the 30-minute time frame, some of us may trade on the 15-minute in terms of taking your entries. So the lower time frames could be any time frame that you decide to take your entries on. But what we're going to do, we're going to look at price, and then we're going to also use our indicators, a few indicators, to confirm what price is actually doing. So we're going to take a look at entries on the lower time frame, right? When to buy and sell, but we're going to also confirm what price is doing using some of our indicators. Now, in part 1, remember, we looked at how to identify a trend reversal on the daily or the weekly time frame. Okay. In part 2, we answered the question. Now, when you get down to your lower or your trading time frames, either the 1 hour or the 4 hour, or any time frame that you choose to trade on, are we really looking for a trend reversal, or are we just looking for, what is the best opportunity to either buy or sell, right? Of course, you want to either take buys or sell, always in line with the overall trend that you've already identified on the daily or the weekly time frame, right? In addition to that, on part 2, we also looked at the best place to take a trade depending on the session that you're trading. So basically what I meant by that is you have to be able to identify either the high or low of the session that you're trading to get the most, to take the highest probability trade. Once you master how to identify the high and the low depending on the direction that you're trading in, you will significantly improve on your overall trading results. So to sum it up in this video, what we're going to simply take a look at, we're going to go down to the lower time frames, and we're just going to take a look at how to confirm what price is doing by using your indicators. And what this simply does, it just gives you more confidence in your trades, right? It gives you an additional, what they call confluence or reasons to take the trade. But remember, you want to look at what price is doing first, right? So when price gets to a certain level or to a certain point, and you're thinking or you're determining whether or not to take a trade, then we want to use our indicators to also confirm that, okay, yeah, this is a good trade to take, or maybe this isn't the right time to be trading. Okay, so let's take a look at some lower time frames, and then we'll add some indicators. Well, we have the indicators already on the chart, but we'll take a look at some confluences using the indicators to greatly improve our trading results as well. So for this video, the currency pair that we're going to use to show in the examples are the USD CZK. But before we get started, let me explain to you guys why I like trading the USD CZK and the type of currency it is. The USD CZK is what you would consider a proxy currency. Okay? Proxy currencies are currencies that are used by the major banks for hedging purposes, right? So when they want to hedge some positions, they use what they call proxy currencies. And the reason why I like to trade proxy currencies, and I also like to use them in my trading videos and examples, is simply because what you're seeing on the screen. These currencies, they run really smooth, right? And the reason why they run really smooth and you can make easy pips from these types of currencies is simply because no one trades them. They're rarely traded, which means the banks, they rarely manipulate these currencies. These currencies aren't highly traded by the Forex market, so the banks, they don't really go in and run stops, or there's really no manipulation to these currencies. That's why when you look back on a pair like the USD CZK, how smooth do these currencies run, right? easy trading with these types of currencies. Let me show you guys a few more, like the USD Tri. Right, here's another proxy currency. Right, let me bring it down a little bit, take off some of the levels so I can show you guys what I mean. If you look at these currencies, look how smooth they run. When they go up, they go up. When they reverse trend, they give you clear reversals, and then they go on long runs. Because these pairs, these types of proxy pairs, they aren't heavily traded by traders, so they aren't really manipulated by the big banks. So if you're ever looking to make some easy pips out of the market, try your proxy currencies. One of the drawbacks from trading proxy currencies is that the spread on them, they're usually a lot more. They're much bigger than if you trade the traditional or the major currency pairs. So the proxy currencies, they don't really work for day traders. But if you're a swing trader, a position trader, if you don't mind holding the trade for a few days or a couple weeks, man, these are some of the best pairs to trade. Let's look at the USD. Let's look at the USD NOK. Look at this. Man, even new traders can trade this. This is all a downtrend. Look how this thing just runs, right? So yeah, I just wanted to show you guys that, since I was using proxy currency. This is the USD CZK is like one of my favorite currencies to pair to trade, because the spread on this one isn't that big, and when it runs, it's just very easy trading, at least for the style that I trade. So I just wanted to show you guys that really quick before we get started on part. All right, so in order to know where a trend is going to begin, we must first find out where the trend is ending. And the section of the chart that we're going to actually take a look at is this section right here. We're going to look at this section right here. The reason why I chose this section, because after you get this move right here, and then you get this push back up to the top, it's clearly understood that we're in an overall downtrend on the larger time frame. So let's go ahead and mark off how the reversal took place right there, right? So the uptrend ended, downtrend began. But we already knew we were in a regular, we already knew based on this move that we were in a downtrending market. Okay, so when we go down to the smaller time frames, the section that we're going to actually take a look at is right here. This is the section we're going to be looking at in terms of where we would have taken our trades. All right, here's why I chose this section. Because if we're looking to take a trade off this level right here in a sell trade in the downward direction, then it's good. It's a good assumption that price is going to move to this level, right? This support level. But we don't know all of this is going to happen, right? So we would have been looking to take a trade with a stop behind this level to either go 1-to-1 or trade down to this support level. So this is the section that we're going to look at, because that would have been the obvious trade for us. Okay, so first thing we're going to do, we're going to go down to the 4-hour time frame. Yeah, let's look at examples on the 4-hour. All right, there we go, there it is right there. All right, so let me blow it up just a little bit more so we can clearly see the candles. Okay, so this is the section that we highlighted. This is the section we're going to be looking at to take trades. Man, this is pretty easy. But so adding the indicators with our decision to sell. So again, when you go down to your lower trading time frames, you're not looking for a reversal. The reversal has already been established. We're looking for opportunities to buy and sell into this market based on the overall trend of the market, which is down. Okay, so when we saw price come down here and we saw it retrace back up, then we saw this candle, right? That essentially got our attention and let us know that, hey, maybe the market wants to move back down in a sell position, right? Now, what we would also be looking for is indicators to confirm our belief that price wants to move back down. So The first indicator that we have is overall price, right? Price went up and we started seeing the price starting to sell off right at this moment right here. So that is the one indication that, hey, we may be setting up for a sell position. The other indicator that we could use to influence our decision or give us confidence in this trade would be this 200 period moving average right here. So this 200 period moving average is one of the top leading indicators in the Forex market or any financial market for that case, okay, when it comes to technical trading. The reason why this 200 period moving average is so important is it counts back 200 trading days. 200 trading days to give you the average price. Okay, like I said, it's the probably one of the most leading indicators for traders as well as banks. Banks use the 200 period moving average as well. But what's most important about the 200 period moving average, I don't think most traders realize, is that the 200 period moving average is irrespective of any corrections in the market. It's going to always line up with the overall trend. So although price, as you can see right here, let me just show you guys something. This is the main thing about the 200 period moving average. Although you saw price continue to go up back to this level right here, the 200 period moving average always indicated that we were in a downtrending market, right? So when I say the 200 period moving average is irrespective of corrections, that's exactly what it means. It doesn't really take into consideration simple corrections in the market if those corrections never influences the overall trend on the longer time frame. The 200 period moving average shows you the longer extended trend, okay? The longer extended trend. So it's irrespective of corrections, and it's used by all banks. All the banks use a 200 period moving average to show long-term trend direction in the market. So you have your 200 period moving average trading above price. So when price is, trading below price. So when price is trading below the 200 period moving average, you're looking for sales. If price trades above the 200 period moving average, you're looking for buys. Simple as that. So two confluences or two indicators telling you what you already believe price is going to do. The candlesticks are printing sell candles, and the 200 period moving average is starting to trade. It's price is trading below the 200 period moving average. Okay. Now, the other indication that price wants to sell out is that if you look at your momentum oscillator right here, okay. Now there's a lot of different oscillators or momentum indicators that you can actually use in the market. Some people use the RSI, which is the relative strength index. Some people use the stochastics. I am a stochastic trader myself. I love using the stochastic. Some people use this overbought, oversold indicator, but whatever indicator you use, I would say really learn and try to do your best to understand what that indicator is supposed to read. How it's supposed to read and how to use it. Just don't plop something on your chart that you really don't know what it's supposed to be doing, something you just saw in a video, something like that. But really get an understanding of what the indicator indicates and how it's supposed to be used. So again, you have price trading below the 200, you're in a downtrending market, you're printing sell candles, and then right here, if you look at your momentum oscillator, you just crossed over the 80 level. So you see price is showing momentum to the downside right there. So that in itself is actually enough to take the trade. Not to mention there's another level of support, resistance right here. There's a level of resistance right here. I wasn't showing that level, but there's another level. It's bouncing off a level of resistance right there. Okay. Same goes for this position right here. The exact same setup you got. The only difference for this setup is basically price came back and retested this level, and you're in an overall downtrend of the market. So this would be, at this point, this would have been considered what we call a double top. A double top, and you have regular divergence. So you see price getting weaker on the momentum So you would have been looking for another sale. Okay. Alrighty. So let's take this area and let's look at it on a 1 hour time frame. Let's look at it on the 1 hour. Alright. So same sales. Yes, I'm too lazy to change the chart, but I'm gonna find my place. Alrighty. So back to the trading. So as you can see, even if you're looking at it on the 1 hour time frame, you're getting the same thing. The only difference between the 1 hour and the 4 hour is it takes, on the 4 hour time frame, it takes on the 1 hour time frame, it takes 4 of these 1 hour candles to make one of those 4 hour candles, right? Which simply means you're going to see more candlesticks. You're going to see more candlesticks on the 1 hour time frame. You're going to see 4 times the amount of candlesticks, as a matter of fact, on the 1 hour time frame than the 4 hour time frame. Okay, and the setups on the 4 hour may come a little bit slower than the setups on the 1 hour, right? But essentially, you would be looking for the same exact thing. Price came up to this level of resistance. You started getting bearish or reddish candles that indicate sell, right? You look at your momentum oscillators right here. You can see price is starting to get weaker in momentum. That indicates a sell. Price is still trading below the 200 period moving average. Let me make sure this moving average didn't change. Yep, we're still at the 200. So price is still trading below the 200 period moving average. So once you begin to use what price is doing along with your indicators, then trading becomes really simple and easy. The only thing you have to add to that is good money management as well as patience, because you still have to wait for these trades to set up. No matter what type of strategy you have, you still have to wait for the trades to actually set up. So once you learn how to read the market from the daily, understand which direction the market is trading in, then you can always go down to your lower time frames and just, learn how to use your indicators. Look at that price first. Always look at price first. Don't use the indicators before price. You will go wrong. Learn from my mistakes. You don't have to make them yourself. So look at price first. I would say you definitely want to start if you want to take your trades on the 4 hour time frame as a new trader. The reason why is simply because the 4 hour time frame is less candles and it's much easier to read the price action. It's much easier to read when you should and shouldn't be taking trades, right? Now, if you use a 200 period moving average, use your candlesticks, whether you use Japanese candlesticks or the Heikin Ashi indicator over the Japanese candlesticks, and you use a good momentum indicator, man, that is really all that you need to be a successful trader. But you have to understand how to read the charts and how to read what price is doing, or have a good indication of where price wants to go. Once you get those things down pat, you're a trader, and you can trade anything. You can trade independently, by yourself. You can trade in groups. You can do whatever you want with the charts. There's so many. Let me show you guys how many currency pairs I trade. Watch this. I trade all of these pairs, right? And what I'm doing when I look for the pairs, I'm only looking for the same thing that I'm explaining to you guys right now. That is all that I'm doing. I swear. That's all that I'm doing. Like I just click what I'm on, a Euro CAD, right? So I have my indicators on the chart. You see, I use a couple more moving averages. But let me clean this up really quick. Let me make it look let me clean this up really quick. So let me go to the daily, right? So there it is. So this is an uptrending market. So at this point, I'd have been still looking for buys, right? I wouldn't have been looking for sales. Well, nope, not true. I would have been looking for sales. I'd have been looking for sales because of that move right there. So if I'm looking for a sale right here, right? Tricky one. No, that wouldn't have been where I'd have been looking. I'm sorry, I'd have been looking for buys. My 200 period is going up. trading above. I'd have been looking for a buy right here. I'd have been looking for a buy, right? So I would have determined which way the trend was going up. Trend was moving up. I'd have been looking at this price right here. I'd have been trying to get back to this high right here, right? Because I know I can make it up to this high, because that's my level of resistance. So let's highlight my potential trades right there. They're looking for a buy. Drop down to that 4 hour, and I would have made it happen right here. I would have had a buy trade right here. I would have took a buy trade right here. I wouldn't have taken a buy trade right here, because based on this, I think it's trying to go short. Nevertheless, look how easy this was. Simply because I was able to determine which way the price was going on the daily. And then I just dropped to the 4 hour and I just waited. Bam. Easy money. Easy pips. Bam. Easy pips. Why? I'm trading above the 200. Well, I'm actually in a range, but above the 200. Bouncing off support. Momentum is setting up. And I already know from the daily time frame that I'm looking for buys. Easy money. And believe it or not, guys, this is not hindsight. I'm not explaining this in hindsight. You will be able to see this on the chart, because when this closes, say this closes right here, my entry comes right here. My entry comes right there. Right there. I'm waiting on a pullback into that level, right? So my stop is probably going to go right here. My stop is going right there, right? Even if I go down to the 1 hour to take the trade, wait on the pullback, let's take a look at it. A lot of lines. So we're looking at these purple lines right here. There it is. Stop here. Price comes in right there. Puts me right in the trade. 45 pips. Easy money. Look how easy that was. Easy. And as you can see, I'm already setting. I'm waiting. I set my buy limit order, and I just wait to see if it get executed. If price comes in and hits and puts me in the trade, it does. If it doesn't, so oh well. I'll wait on the next one. That's the ball game, folks. That's how you use your indicators to go in line with the understanding which direction the major trend is. Using your indicators to enter your trades. Alrighty. Hope you guys enjoyed this series. Forex King, I'm out.